Hello, and thank you for joining the MVMA for its fourth COVID-19 session featuring Mr. David Kelling. I'm Nicole Cass, the CE Program Manager for the MVMA, and I'll be today's moderator. A few reminders before we get started. If you have only called in via phone and did not log in online, you will not be eligible for CE credit. This is because I'm unable to see who called in. So please remember to log in online also. Secondly, if you have any questions, please type them in the Q&A area. I know many of you know how to use this function, but for those who don't, here's a quick tutorial. Click on your screen, and along the bottom, you'll see a series of circles. Look for the black circle with dots, click on it, and you'll see Q&A option. Click on the Q&A itself, and a window will appear for you to begin typing a question. All questions will be held to the end. I'd like to introduce today's speaker, Mr. David Kelling, who is a partner at Kelling, Bakovich and Company Limited. He earned his BS in Accounting and Finance from Mankato State University and earned his master's degree in Business Taxation from the University of Minnesota. Please go ahead, David.
Thank you. And I sort of need to share a screen here. All right, I think I've got that shared now for everybody. Today, we're sort of going to go through how to sort of weather the storm financially for your practices and small businesses. And actually, I got 3 different slideshows here that we're going to sort of go through. The first one's a little more general, just things to do as a small business. And then the last 2 are a little more in-depth. One goes into the SBA financing and different options that are now available there. And then the last one will be more on the family leave and the FMLA laws that were just sort of recently passed that affect small businesses. So we'll get started here with the 6 things that you should do as a small business owner. 6 items are consolidate as many liquid financial resources as possible. Prepare and update a crisis budget, develop an employment strategy, prepare and maintain a cash flow burn rate analysis, track forgivable loan expenses, and then implement some cloud technologies. When we start talking about liquidating or consolidating liquid financial resources, we're really sort of talking about cash being king at this point in time, where we're at here financially and in the economy. Some of the first things you should do is look at and obtain the SBA loan. We'll talk a little bit more about this in the next section, but they definitely have come out with 2 new loan programs just sort of for the COVID-19 time period here. And I think there's some ones that really should be looked at and address whether they make sense for you. Evaluate other open lines of credit. Do you have an open line of credit currently with your banker? Can you obtain one? Another thing to look at is what the renewal date on that line is, when it's going to come up for renewal. Think about consolidating cash savings. And then the last one, consider home equity financing. Really, the theory here is starting to look around and find, where can we get cash to maintain our business and keep us alive here until things get back to a little more normal. Number 2, prepare and update a crisis budget. When you start looking at a budget for this time frame, it's good to divide your cost into sort of 3 different areas. You have fixed costs. Those are the costs that you are going to have sort of no matter what. There's our loans coming due. You have some rent that you're going to have to pay. Just those items that you don't have much wiggle room there, and you're going to sort of have to pay them each month as they come due. The second one is variable. Those are the ones that you may be able to postpone or even go without during this time. And the third category is payroll, and we just like to keep that one separate because it tracks so many things. When we start talking about the SBA loans, a lot of those factors and the forgiveness come from how much payroll you paid. It's also one that fits sort of with a variable one, and you're going to have some ability to flex with that. The other thing you want to do is sort of contact the bank, your bankers, and see if you do have loans out there, can you work out a deferral option. If we're being able to put off those loan payments for a couple months, even if they're going to get tacked on to the end, it may just be what you need to get your cash flow to where you need it. Third one, develop an employment strategy. And first thing you sort of want to do is make a list of vital and non-vital employees. And then you need to consult your employment attorney and find out, what different requirements are out there. A lot of you may have contracts, employment contracts with the staff veterinarians. And that's the one to make sure you know what's in those contracts and make sure you're following those. You want to be able to keep track of your time and know which times to keep track of, especially now with the new Family Leave Act. Can you do furloughs? Can you do layoffs? Can you do voluntary paid time off? You're just sort of looking at how do you manage the staff. And the fourth one is a cash flow and burn rate analysis. This is really important to do, is to keep a spreadsheet. And I got an example here I'm going to pull over here in a second and show you. But you really want to be able to start each month, maybe even each week, with what is my beginning cash? What do I think is going to come in? What am I anticipating as for the outflows? And what is my ending cash? And once you get this done, you're going to be able to figure out what sort of what they call a cash flow burn rate, which is just really how fast or how long is that money that you have built up going to last. I'm going to pull over a spreadsheet here that we sort of maintain, and that's just sort of our cash flow, our burn rate calculator. As you can see here, we're sort of starting with beginning cash and looking at your ending cash, and these all sort of calculate in from other fields. And then you can figure out, based on number of months that you've calculated as beginning to ending, and see how fast you're burning through cash. On this case, we were looking at it on a quarterly basis. We started with 40,000, we ended with 22,000 over 3 months. So we're burning through about $6,000 of cash a month. And then you go down to the next step and you look at how much cash reserves you would have divided by your burn rate. You can figure out how long your cash reserves are going to last you. A lot of these numbers come from the second tab on the spreadsheet. And Nicole, I think I made this available to you so you can pass it on to anybody that's listening today if they would like to have it. The second tab over here is the cash flow rate, and we just sort of start with your beginning cash, and then you sort of go through your anticipated cash receipts. What do you think you're going to have for cash sales? What are you going to collect on your receivables? Where else can you get cash? The loans, you get some loan proceeds. Can the owners contribute some cash? So you just sort of try to develop a list here of how much cash can I see coming into the practice. And down below we have all the different cash paid outs. Advertising, commission, labor, insurance, interest. You got rent down here, office supplies. I think there's even a couple blank ones down in the bottom here to sort of fill in for other things. Utilities. And then down at the very bottom is sort of the non-expense type things. You got to pay some principal on a loan. Are you anticipating cash purchases or any owner's draws? So you just sort of see each month as you go through this spreadsheet what is happening with your cash. And once you sort of get that complete, like I said, it sort of follows back into this burn rate analysis. I think it's really important to start to know how long it's going to be before your cash starts running out, and so you can start anticipating what you're going to need to do. Start looking at the SBA loans, talk to your banker, can you get some financing that way? Or are you going to be looking at it? You know, I've got 4 or 5 months worth of cash. I think we're going to get through this crisis by then, and we're going to be fine. We can start picking up back to normal. All right, that sort of covers that one. The next one is tracking qualified loan forgiveness expenses. It's been in the news quite a bit here. This SBA program, the Paycheck Protection Program, where they're offering loans that if you use them for certain expenses, mainly payroll and basically rent and mortgage payments, sort of keeping the building open, that a lot of that loan will be forgiven. Well, as you go through this, you're going to want to be able to track those loan expenses that are forgivable. So you just want to sort of develop and maintain a spreadsheet and track that as it goes. We'll talk a little bit more about it, but the SBA loan is really going to look at this 8-week period after you get the loan to see what you spent the money on. So if you can track those, it's going to be much easier to get that information back to your banker so you can get the forgiveness. The last one is implementing a cloud-connected technology. Went too far there. The idea on this one, the thing we're looking at here is how can you be able to do some of these things we talked about in the first 5, being able to get that cash flow and your burn rate and track expenses and hours. And the more you can do that in a cloud connected environment, the faster you're going to be able to answer those questions, and the easier it is going to come up with what you need to do. There's just so many technologies out there now that allow for video conferencing and internal communications, and some cloud-based accounting programs that are just really so much better than they were even 3 years ago. And I said they sync with your bank, they sync with your credit cards, and they really allow you to stay on top of your finances. And at this point in time, what's happening to your cash. And some of those other ones, the video conferencing is great. The internal communications, just keeping in touch with people and not having to have everybody face to face in the same office. So that's sort of going through our 6 things you should really sort of be thinking about and looking into as we go through this time. Now I'm going to try to switch over to the next slideshow here. Give me a second. All right, let's see if we can get that going. All right, I'm having a little difficulty here getting switched over. All right, stop sharing here for a little bit, see if I can get this worked out.
As Dave indicated, he did send me copies of his PowerPoint, and he's going to share another Excel spreadsheet besides the one he already shared. And so I will email those out to everyone afterwards. So don't stress out if you're trying to write everything down.
All right, I think I got it figured out here. All right, there we go. All right, on to the second part here, SBA Loan Assistance. This has been in the news so much and changing so fast. Hopefully a number of you have already been in contact with your banker and are sort of getting in the queue to take advantage of some of these programs. There's really two with the SBA, two different loans. The first one we'll go through here is the Economic Injury Disaster Loan Program. And the second one is the Paycheck Protection Program, which I sort of alluded to a little bit before. Two completely different programs. You can actually do both of them. You just can't use the dollars for the same thing. So if you were to get one of the loans and use it for payroll and have it forgiven, the second, this economic injury disaster loan cannot be used for the same use of funds. All right. First of all, in order for this to happen, this economic injury loan, it has to be declared by the governor. We've crossed that threshold, so this is available for practices in Minnesota. The loans can be up to $2 million, and the interest rate is at 3.75 for businesses. And as long as you have under 500 employees, you're going to be eligible. Where I really see this loan coming into use is it's not forgivable, which is the best part about the Paycheck Protection Program, which we'll cover next, is the interest rates are really low. So if you have current loans out there that are a higher interest rate, this might be a great time to refinance, grab a little bit of a lower interest rate and get those payments reduced or spread out a little bit. Or if you're looking at expanding, this might be a great way to go. It's really sort of a lot more of a long-term one. If you look here, you can actually spread it out up to 30 years, depending on what it is you're purchasing. It's an actual pretty formal loan application with the SBA. So you're going to have some credit history and have the ability to show that you can repay the loans. And they are looking for some collateral if the loans are over $25,000. You can use real estate as collateral. But they're saying too that they're going to be a little more lenient on that collateral, and a personal pledge may actually work in this case if it's a small enough amount. I said the downside of this loan is not forgivable. The upside of it is you can spread your payments out over a longer period of time. So if you have some loans there that'd be tempting to refinance, or a line of credit that's been sort of hanging out there and the interest rates getting up there, might be a great way to go. The second program they're offering out is the Paycheck Protection Program. That was part of the CARES Act. This loan is available up to $10 million, but each business is capped at 2.5 times their monthly payroll over a 12-month period. Most banks we've seen are basically going back to 2019 and looking at your payroll. You sort of take your payroll divided by 12 times 2.5, and that's how much you can ask to borrow. I have seen a few banks going back and they're looking April 1st to March 31st, the last 12 full months, and to figure your amount that you can borrow. The great part about this, the interest rate is 1%, which just changed. It was at 0.5, but for some reason they were upped it to 1. The other thing that they changed is now the maximum term of the loan is down to 2 years. It was at 10. What that sort of means is once you borrow the funds, there's actually a 6-month window of repayments or no payments or forgiveness. And then at that point, they start having you repay the loan back over a 2-year period. So I go to this one. So you must show the ability to repay the loan. Like I said, here we've got that the payments defer for 6 months. or even up to a year, depending on the circumstance. I think we will definitely see a little more information on this, on if they're going to go 6 months, they're going to go a year. This is still a very fluid loan program. Most of the banks weren't up and running and accepting applications until Friday. The U.S. Treasury is making changes and sort of trying to set the rules. So we're getting a lot of question and answer stuff back from Treasury, just trying to give us detail exactly how this is all going to work. Because everybody sort of wants to know, how do you get this and how do we get this loan forgiven? And sort of what happens is once your loan is approved, that starts an 8-week period. That 8-week period, they start looking at what you use the proceeds of the loan for. And if you used it for payroll costs, which includes gross payroll, it includes payroll taxes, so mainly SUDA and Social Security. It includes rent. It includes mortgage interest if you have a mortgage instead of rent. It'll include the utilities on the practice. And it also includes some other debt interest. So that's the one's probably up in the air as much. I've seen where they're going to say, no, it's got to be a mortgage. I've seen some where they're, yep, other interest, as long as you had that loan before this all started. So they look at that 8-week period and you've got a bunch of expenses. And they started looking at, and you start tallying all these expenses up for that 8-week period to see how much of the loan you can have forgiven. And the big caveat is that payroll cost must make up at least 75% of what you're going to have forgiven. So for an example, if you've borrowed $40,000, that 8 weeks you had $30,000 of payroll, that would be 75%. So then you can start adding your rent and your utilities cost up to try to get that other 10 forgiven. And businesses who receive the Paycheck Protection Program to cover employee salaries, the payroll support, mortgage, and other stuff, they cannot receive the economic disaster loan for the same purpose. So that economic disaster loan is going to have to be for something else. Maybe you're refinancing a current loan. And I'm going to share another little spreadsheet we had sort of developed here. It sort of helps walk you through some of these calculations. This one sort of estimate how much of a loan you can have and how much is going to be forgiven. And these numbers sort of fill in based on down here. So here we did an example with gross pay of $1.15 million, where the officers were getting $125,000 for the year. And they had some other benefits that they paid out, payroll benefits, the health care, the employer portion of the match. We sort of add those all up, and that was our eligible payroll expenses. From that, you need to subtract payroll up and over $100,000 per employee. So in this case, out of that 1.15, they had 450 that was over 100,000. So they subtracted that off, and so they had payroll they can use for their calculation. Here's where they divided it by 12, times it by 2.5. So they could get a loan of $175,000, which would be at 1% and then payable over 2 years, unless you can have it forgiven. And on the bottom part of our spreadsheet here, we do a little more calculating on it. There's two portions of the forgiveness. One is how many full-time equivalent employees did you have at the beginning of the loan period, and what was your base for the year before? What they're really looking here and trying to do is to make sure that you're using these funds to keep people employed. And sort of the whole purpose of this act was to get money to small businesses so that they could maintain and keep people employed and keep the business going. So if you had 10 full-time employees at the beginning of the period, they look back to the year before and say, how many full-time employees did you have? You really want to make sure you're keeping those all employed. If you start going down, it starts reducing the amount of forgiveness. The forgiveness here is estimated down here. We're looking at how much of wages you paid out during that 8-week period. And they're looking at payroll benefits that you paid out during those 8 weeks. Again, healthcare, retirement. They're looking at portion of payroll taxes. And when they're talking payroll taxes, they're talking the employer's share of Social Security and Medicare. They're not talking federal and state withholding. It's strictly taxes that the employer pays based on the amount of payroll they had. So here they paid over $142,000 during those 8 weeks. They had a little bit of excess over that 100, so they subtracted that out. So they had $131,500 of payroll expenses. So now they can start adding those other expenses. They paid some rent out. We don't have any utilities listed here, but we definitely could add those in. Let's just try that. Say they had $2,000 utilities. So then it adds to their forgiveness. You just have to make sure that if you take this number times 0.75, this number has to be at least that or higher. When we do this and work through this calculation, we go back up to the top. And it's going to figure out your estimated forgiveness. And about 82% of that loan was forgiven, which is a pretty great deal if you can go in there and borrow $175,000 and only have about less than 10% of it that you have to repay, and you're repaying it at 1%. That's why this loan program is such a great deal. If you haven't already had a hold of your bank and you haven't started that process, I really encourage you to work with your banker and get through that process and see what you can do. I know there are a couple larger banks that are getting close to or have closed. Wells Fargo, for instance, has a limit on how much they can lend out through this program, and they feel they have reached that, so they are not taking applications at this time. U.S. Bank, I believe, is open to their customers only at this point, but there are a number of banks in the Twin Cities area in Minnesota that are still taking applications and are looking for those. If someone is really interested, let me know. I've got a few names out there. But you can also go to the SBA website and search for lenders. They give you a map of Minnesota, you enter in your zip code, and they'll start going through a list of the closest bankers that are in the program. All right, documentation. Whoops, got to look carried away there. For the economic injury disaster loans, you're going to need current financial information. You're also going to need these other forms here that you get through the SBA. Form 5, which is just a business loan application. Economic injury disaster loan supporting information. Personal financial statements for the owners. And then if you have any related businesses, they're going to want some information on those, which for a lot of people is going to be their real estate partnership that they have the building in. And then a schedule of liabilities. Additional information may be requested, especially around the payroll. We're seeing a request for a lot of payroll tax returns, the 940s, the 941s, items like that. Generally, once they contact you for additional information, you'll have 7 days to reply. So anybody that's gone through this loan process for the economic disaster, I sort of went through it just to see what was going on with it. And it starts off with a real easy online 5-10 minute questionnaire. Once you have that done, it just sort of says thank you, and they're going to get in contact with you. The other part with this loan, or at the same time this loan, when you do that, there is a grant out there for $10,000 that you can apply for too. Give me your bank information, and on there it says transfer the fund in 3 business days. Here to tell you, it's 3 business days after your application has been finalized or approved. And I think I'm talking with a couple of clients and they're on days 9, 10. So it's not a real quick process. It's not like that $10,000 is going to be in your bank account in 3 days. It's supposedly a grant, and then you go through the process of applying for the rest of the loan here for the economic injury. And at that point, you can have that forgiven, or you can sometimes they'll have you roll it into the other loan. If we look at the second part, the Paycheck Protection Program loan, which they're going to look through there is there's a form 2438 off the SBA website. Definitely look through that, print it out, maybe even fill it out as you go. And they're going to look for payroll documentation for the last 12 months. And your approved lenders and banks may request additional information. What we're sort of seeing with that one is each bank is, I'll step back, the SBA sort of forced this process down onto individual banks, and they're sort of mandated to handle the loan applications for the SBA. So each bank is sort of figuring out how they're going to do this. That's why we're seeing a little bit of variation, and I can't just say, here's what you're gonna need, because each lender is sort of coming up with their own list of information that they are requesting. Like I said, some of them are going back to 2019 payroll, some are taking the last 12 months, sort of that April through March look at it. And I think some of the items are going to be fairly the same. I think you're going to need the 940s. I think you're going to need financial statements. I think you're going to need a personal financial statement. And I think you're going to need, the SBA is going to eventually going to be looking for that form 2438, basically their application form. The other ones, I think the banks may have their own, personal financial statement. They might have their own form they want you to fill out there rather than something from the SBA. All right, that's sort of that chunk. There's a lot in with that one. It gets pretty complicated on how much can be forgiven and when that is, but I think the biggest thing is know those costs, track them as you go. All right, I'm gonna see if I can get over to my third one now. There we go. All right, that one went much smoother. All right, maintaining staff who've been impacted by COVID-19. There's a few things that have come up here with this. And first is they sort of passed this Family First Virus Response Act. And basically what that did is it expanded the Family and Medical Leave Act, FMLA, and provided for some emergency sick pay. And this did go into effect on April 2nd. So pretty much all employers are impacted by this. This is really geared at those with under 500 employees. That's the first thing I'm going to say here is there's really 2 parts to this. There is the emergency sick leave, and then there's the family leave portion of it. And what is required by the employer varies with those 2. I think the first thing is that there's actually a poster that all employers are supposed to post. And I think I have a copy of that. Nicole, I'll see if I can pass that on to you so you can forward that for anybody that would like a copy of that poster.
would be nice. Thank you.
I'm gonna switch these over here so you guys get a full screen out. There you go. That's better. All right, the family and medical leave. Who's eligible? Any employee who's been with you for at least 30 days is eligible for this. In order to qualify, the employee must be taking leave to care for a child whose school has closed or their daycare provider is closed. What's happening here is if an employee comes into you and says, hey, I can't work my full 40 hours, I've got an issue here with daycare. Or I have to stay home because my children aren't in school and I need to have some time off. This allows them to have that time off at pay. And the pay is 2/3 of their normal pay, up to $200 a day. And what the act did was allow the employer to get reimbursed through their payroll taxes that up to that $200 a day. So the employer is really not out the funds except for payroll taxes. They're going to have to foot the bill on that. You're going to have to pay that. But if someone comes in and says, hey, I'm going to be out for the next week due to these issues, you need to go back in, you figure out what 2/3 of their pay would have been for the hours they were expected to work. And if it's under $200, you pay that. If it's over $200, you can just cap it at $200 per day. Start going through here. Yep, and employees get 2/3 their normal rate at the hours, number of hours the employee would have worked for. And the sick leave, this family leave, this can go be up to 10 weeks. But the first 2 weeks, they actually have to come underneath the sick leave portion. Same pay rate, so basically it's 12 weeks. It's 2 weeks of the sick leave, and then 10 weeks of the family pay. Employees are entitled to be reinstated once that's over. Like I said, employers receive 100% credit against payroll taxes, which just sort of means is once you pay this out, the next time your payroll tax deposit is due, you can subtract off whatever you paid out to that employee underneath this act. If the credit would actually happen to be more than what you'd owe in payroll taxes, there is a form that you can file to ask for that refund, or you can just take the credit and move it forward. The other thing you should note here too is that you do have the right and you should ask for some documentation. It's going to be pretty easy in our case. We can go in and find the governor's directive that the schools be closed. That's a pretty easy answer. If you're looking at daycare, I'm assuming that most daycares will easily provide a letter if they haven't already saying, hey, as of this date, I'm going to be closed for the X period of time. The other thing that you can do is you can flex it. It doesn't have to be an all or nothing. So if they were to come in and say, hey, I'm sharing my time with my spouse, we're going to, I think I can do 20 out of 40 hours this week. You can pay them for that 20 hours, get the other 20 paid for. They would get the 2/3 of the pay, or up to $200. The other thing you cannot do is require that they use their sick time first. They can choose to do that. By law, you have to pay them for the family leave time first. All right, on to the sick leave. This one's a little bit different. One, it's only 2 weeks. And two, it's only employees that are subject to quarantine or are caring for someone that is subject to quarantine. The stay-at-home does not qualify there. So they actually have to be quarantined. The employee had to be advised to be quarantined. They're experiencing symptoms and they're seeking medical diagnosis, that time off there, or it's like I said, caring for somebody. Employees, and then 5 and 6 are more for the daycare ones. There is an exemption out there if you have less than 50 employees. Have not heard a lot about people going through and trying to get this exemption as they feel having to follow these rules is going to be detrimental to their business. I think the case there would be when it's not 1 or 2 employees, but pretty much full staff. If you're full staff off, they're going to, it's really going to impact the business ability to continue. At that point, a small employer can ask for an exemption on that. I don't know how much the sick leave is going to be used. I think we're going to have some occasions for that. Employees may also be better off going on unemployment and going that route. So I think a lot of people are going to be looking at that. I think this the family leave where you're paying for some time because of kids not being in school, I think that's going to be a real possibility on that one. So basically, the steps are get that poster put up, let the employees know what their rights are, and then they need to come to you, the employer, and say, hey, here's my issue, here's what I need to do. At that point, then you start following to these rules and have to start following, and here's where you start needing to really track this so that you make sure that you are getting the credit that you're entitled to and not paying a staff member for not being there. Let's go back one here. All right, paid leave, just a little more specifics there. For the sick leave, it's up to 80 hours. So basically, looking at that as 2 weeks. Part-time people can receive this also, and you don't have to pay them for a full 40 hours a week. It's basically an average of what they've worked over the last 6 months, or if they're new, what they were hired and expected at the time that they would work. So you might end up that 80 hours might get stretched out. If they're normally working 30 hours a week, you might have a little over 2 weeks there. On the sick leave, the pay isn't $200 up to dollars a day. It's actually up to $511 per day, or a aggregate total there, that $5,110. And this is only if they meet $511 a day is only if they meet the requirements in 1, 2, and 3 on the previous slide. Let's go back to those. Subject to quarantine, was advised by a health professional to quarantine, or is experiencing symptoms of that. That's the sick leave part. The rest of it is the $200 a day. When it comes down to having to take care of the kids. That's the employee here, which is that's up to $200 a day, aggregate of $2,000 in total. That's for the first 2 weeks. And once they hit that first 2 weeks and hit that $2,000, then there's another 10 weeks, and that's the family leave portion of it. And I have to use all that sick leave, that first $2,000 under the sick leave before the family benefits kick in. I said here, this is probably the important part, is the employer receives 100% credit against payroll taxes for payments made under the family leave. If the credit is more than the tax, the employer can request a refund. Like I said, it's not really handled on your 941. There'll probably be a line there to show what you've taken as a credit, but you can actually handle that as payroll deposits are needed. So that's, if you're making your deposit 3 days after payroll or on a monthly basis, you can recoup those funds at that time. You don't have to wait for the end of the quarter. I think that's my last slide there. Went through quite a bit of material there. Definitely open up for questions.
Yes, presentation. That's where the bulk of them lie with regards to the loans. And so we had an individual who indicated that yesterday their banker told them they could not apply for both the EIDL and the PPP. But I believe you said that's not true.
Correct. That is not true. It's the point gets to be is what are those funds to be used for? And that's where it gets really tricky, is when you go into the economic injury disaster loans. You need to make sure you specify what you're going to use those funds for, and that cannot be your payroll, your rent, your utilities. But yeah, there's a, like I said, these things are changing really fast, so I guess I'm not surprised to hear that. But I guess my thought process would be go through and get the Paycheck protection program loan first, and maybe then come back in and try for the EIDL loan.
Okay. Following up with the EIDL grant, fall into place with, how does it fall into place with other loans or options?
I guess if you can go through and you can get the Paycheck protection loan, I think that's the #1 on there, just because it's forgivable, which is just a huge benefit on there. And I think then this one follows second. I think at that point, when you're looking at that loans, it gets bundled in and looked at with any other options you have. There's nothing special about it other than the time frame can be a little longer and the interest rate is pretty low. So I think you can use that interest rate and you compare it to your other financing options. You have that interest rate is the lowest. It makes a lot of sense to go with it.
Okay, apologize, you cut out there for just a moment.
Sorry.
How long will the EIDLs be available to make an initial application?
I think they're going to be out there a bit longer. What I've seen so far is through the end of June. But I don't know if I'd wait that long. One is the time frame for financing is going to take a little while. And two, I think as the Paycheck protection loans get used up, and it looks like they're going to go pretty quickly because there's only so much financing through Congress on that, is people will then fall back and start looking at those loans, those EID loans in their place, and I think then they're going to start seeing those go a little quicker. I think one advantage we have there a little bit is it's a little more state by state. So I think that's definitely going to help Minnesota out there.
Are you still there, David?
I am still here. Am I cutting out?
Okay. Yes, you are a little bit, at least for me. So the next question is regards to the application date. Is the sole proprietor self-employed or not? Is that date April 3rd versus April 10th?
The self-employed ones are supposed to be April 10th. What I've been advising people is get in contact with your banker, find out what you need to get them, get in line, and don't wait till the 10th. It's a little bit of a fear because I don't think anything is being set aside for the self-employed, and everybody else sort of unfortunately got a weak jump on you. So I think get in there as soon as you can is sort of the name of this one.
Okay, now we're kind of switching gears towards the last presentation. Can the sick leave be enacted if an under 18 child is advised to be under quarantine and the parents need to stay home with them?
Yes, yep, because that is either the employee is being quarantined or if they're caring for somebody that is. So that would be the sick leave you would get that there for 2 weeks at the 511, and then after that, I'm assuming the child's going to still be home here. We'll see when Minnesota schools kick back in. Then it would drop down to the 200 for the next 10.
Thank you. Continuing with the sick leave, if they have staff requesting time off because of a cough and they're seeking a diagnosis, is it best to have a doctor's note? Not all of the cases are going into the doctor. They have an employee requesting sick leave pay. Are they still able to be reimbursed without the proof that they sought out medical direction from a healthcare provider?
Yeah, for the month of April, they're going to be pretty lenient on this as they get the rules set in place for this. But it is the employer's right to request proof. And you do want to get the proof and have whatever you can on file, because the government can, say the government, actually I think it's the Department of Labor, can come back and say, hey, we saw you took this credit. Why did you take it? And at that, so I would say you want to get that proof as far up front as you can.
Okay, thank you. Another question, just in your experience, how long is the SBA taking to respond to the EIDL application after you initially apply?
I would say we were probably looking at least 2 weeks. Like I said, I've got a few clients that have put it in there. So I actually went through the process just more out of curiosity for myself. I think once it gets to the loan process, you probably won't take them up on it, but we'll look at it. I did that, I want to say 2nd. I have not heard from them. So I know we're out at least a week. And so I'm guessing it's going to be 2 weeks.
Thanks. Can the EIDLs be used for capital improvements, building renovations, something like a new roof?
That is my understanding that they can be. That's I think that the base part is showing that because of the economic situation, that other financing was not available. So this was your best alternative to do that and keep your improvements and keep the practice going.
Great. At this time, I am not seeing any other questions come in. So I do want to thank you very much for helping us walk through these. As you indicated, things are changing daily, so it's tough for everybody to keep on top of it.
Yeah, we're hoping that now they're accepting some of the applications, that things slow down a little bit here, and we sort of see what the playing field looks like. But yeah, if anybody comes up with additional questions later on, feel free to get a hold of me. More than happy to answer them.
Thank you. Thank you so much for your time and your expertise today. A reminder to everyone else, I will be sending out a copy of the PowerPoints, the poster, and the 2 Excel documents. So please just give me a little bit of time to get the poster from David, and we'll get those out to you hopefully by the end of the day today. Thank you, everyone.
Thank you.